Hey guys, welcome back to the Capital Mindset Show. Today we're going to be doing a live reaction of Take-Two Interactive's earnings report. They reported yesterday after the market closed. The date today is 5/17/2022. For those of you who've been keeping track of the channel, we are in fact interested in this company. We've actually expressed that interest several times over the course of several live streams. Also, a point of record, I want to actually announce that I have been starting to post on TikTok, Instagram, and YouTube Shorts with short morning updates. So if you guys want to watch those in the platform of your preference, you guys can go follow me on any of those platforms and you'll get that content. All right, on to today's call. We shall start the play with the CEO of Take-Two Interactive.
Team's unwavering commitment to quality and the ability to deliver captivating and engaging entertainment experiences that transcend geographies and generations. On behalf of our management team, I'd like to thank all of our colleagues around the world for helping us to achieve these results, especially as we continue to navigate through the new normal following the pandemic. During the year, we positioned our organization strategically for long-term growth. To that end, we bolstered our creative teams by adding nearly 1,000 new developers, including through the acquisition of several talented studios, which will help us expand our capabilities and support our growing pipeline of offerings. We broadened our portfolio further with the introduction of new intellectual properties and business models to drive player engagement.
Just a quick comment. You guys know the CEO. He's above the age of 60. Actually, Google an image of the CEO and tell me how what kind of a Chad this guy is.
We agreed upon our pending combination with Zynga, which will grow our audience significantly and increase exponentially our net bookings for mobile, the fastest growing segment in interactive entertainment, while also providing us with substantial cost synergies and revenue opportunities. As we build our scale, we believe that we can grow our margins meaningfully. Lastly, we advanced our ESG efforts, and I'm pleased that we recently published our first dedicated report, which includes information on our initiatives to date, as well as our roadmap for the future. During the quarter, our newly released WWE 2K22 and Tiny Tina's Wonderlands outperformed our expectations, as did Red Dead Redemption 2. NBA 2K22 continued to grow its audience, with the title selling in over 10 million units to date and exceeding sell-in from the prior year. During the fourth quarter, engagement remained very strong, with average active days of playing up 6% and average games per user up 13% year over year. In addition, NBA 2K22 Arcade Edition continues to hold the #1 position on Apple Arcade's top game chart, and for the full year, downloads of NBA 2K Mobile increased nearly 25% as compared with fiscal 2021.
Just a quick pause there. NBA 2K is a very, very popular game and a very lucrative endeavor by Take-Two Interactive. So for those of you who've heard my commentaries here and there on EA, I'll just state that the FIFA series, as well as any of their sports series, Madden series, any of those, if you guys are a fan of them, I'm just going to state that it's very interesting for a company like this to produce basically the same game year in and year out. And again, people will continuously purchase it. So the cost associated with actual production of those games isn't as high as some people might actually think, and those are basically like cash cows. Now 2K, it's very interesting to note that they are actually having a strong result on the mobile section, and like I've been talking about with the Zynga acquisition, which actually is set to close next week, we are expecting to see a greater incursion in the mobile space by Take-Two Interactive, which is again Netflix. If you're watching, if the management team of Netflix, you guys can hire me as a consultant, buy this company. And then you'll have a great exposure into mobile and the consoles and PC, right there. It's just sitting here for you. You'll have to pay a premium probably, but, it's probably easier than building out your own. All right, back to the earnings.
We see a significant opportunity to add unique and innovative experiences throughout the game and focus on expanding our player base. On March 11th, 2K and Visual Concepts returned triumphantly to the squared circle with the eagerly anticipated release of WWE 2K22, which achieved the highest Metacritic scores on both Xbox and PlayStation platforms in franchise history. Setting new benchmarks for quality, the title offers more features and enhancements than any prior release in the series, including a redesigned gameplay engine, new controls, foundational improvements, upgraded visuals, and an array of options requested by our passionate player base. Notably, WWE 2K22's sell-in for its first 4 weeks exceeded the levels achieved for both WWE 2K19 and WWE 2K20, even with a revised release window that was not during the holiday season. Consumer engagement with the title has been outstanding, with over 140 million in-game matches played to date and over 5.6 million hours of WWE 2K22 content viewed on Twitch. I'd like to thank 2K and the WWE team of Visual Concepts for their commitment to reestablishing this incredible franchise. We greatly appreciate WWE's immense support in launching this year's game and look forward to continuing and building upon our successful partnership in the years to come. On March 25th, 2K and Gearbox Software released Tiny Tina's Wonderlands, an all-new fantasy-fueled offering that has taken our partnership with Gearbox to new creative heights and is viewed as the best new franchise launch from 2K in several years. The title has resonated with core fans and new audiences alike, with nearly 30% of players having never before played a Borderlands title. To date, Tiny Tina's Wonderlands has exceeded our expectations and is being supported with cross-play functionality, an array of post-launch content, and a season pass. I'd like to congratulate 2K and Gearbox on delivering another stellar game, and we look forward to the possibilities for this new franchise in the years to come. During the fourth quarter, Rockstar Games expanded the reach of their iconic entertainment experience, Grand Theft Auto V, with the release of new versions of the game upgraded specifically for PlayStation 5 and Xbox Series X and S. This marked the third console generation for which the game has been made available since its initial launch in 2013, and to date, the title has sold in more than 165 million units. Also, for the first time ever, Grand Theft Auto Online was made available as a standalone title for the latest generation consoles, featuring an array of graphical and technical enhancements.
I swear they release Grand Theft Auto every time there's a new console. How many consoles? We're on their third console.
A new career builder, new vehicles, and more. These versions were well received by the game's vast community of players. In the period, Grand Theft Auto Online maintained its massive audience size from the prior year, while growing 8% and 74% as compared to the fourth quarters of fiscal 2020 and 2019, respectively. In addition, Rockstar Games launched GTA Plus, an all-new membership program that's exclusive to Grand Theft Auto Online players on PlayStation 5 and Xbox Series X and S consoles, whereby participants can receive a range of valuable player-friendly benefits, including a monthly deposit of GTA dollars and other bonuses designed to help players experience everything Grand Theft Auto Online has to offer, including access to major content packs like last holiday's The Contract. Initial conversion has been above our expectations, which we believe bodes well for this to be an ongoing engagement driver over time. Red Dead Redemption 2 continued to expand its audience and to date has sold in more than 44 million units worldwide. Results for the series were notably above our expectations for the period, which is further proof of the ongoing popularity of Rockstar's blockbuster entertainment experiences. Turning to Private Division, the label's recently acquired studio, Roll7, successfully launched Ollie Ollie World in February, which received significant critical praise for its unique art style and impressive gameplay mechanics. We'll support the title with its first expansion, Void Riders, in the first half of this fiscal year. Championing the best independent talent in our industry, Private Division recently signed 4 new publishing agreements with leading independent developers, Die Gute Fabrik, Evening Star, Piccolo Studio, and Yellow Brick Games. We look forward to working with these talented teams. During the fourth quarter, recurrent consumer spending declined 6% over last year and accounted for 60% of net bookings. Over the past few months, the consumer has seen a wide array of long-awaited, high-quality new releases in the market, including several of our own exciting titles that have not deployed significant live service offerings. We believe that this dynamic has impacted our overall recurrent consumer spending. NBA 2K and Grand Theft Auto Online were the largest contributors to recurrent consumer spending during the fourth quarter, and many of our free-to-play offerings were notable drivers as well. Top 11 continued to perform very well following our acquisition and was our #1 mobile title during the fourth quarter. Two Dots delivered notable year-over-year growth and posted its best-ever net bookings performance, driven by new in-game events and successful marketing activations. Dragon City and Monster Legends delivered a solid finish to the year, supported by enhanced live operations. WWE Supercard has now been downloaded more than 26 million times and remains 2K's highest grossing mobile game. And NBA 2K Online in China outperformed our expectations. The title remains the #1 online PC sports game in the region, with nearly 57 million registered users. We're incredibly excited about our future path of growth, including our pending combination with Zynga. We believe that this will be a transformative moment for Take-Two as we continue to build upon our core tenets to become the most innovative, the most creative, and the most efficient entertainment company in the world. Combined, we'll create a powerhouse of industry-leading titles that span key platforms and genres across interactive entertainment, developed by some of the most creative and forward-thinking talent within the industry. Later this week, our respective shareholders will vote on the transaction, which, assuming such approvals are obtained, we anticipate will close on May 23, 2022. On a standalone basis for fiscal 2023, we expect to achieve a new record of $3.75 billion to $3.85 billion in net bookings as we plan to deliver many new exciting releases during the year. Looking ahead and excluding the impact of our combination with Zynga, we expect fiscal 2024 and fiscal 2025 to set even higher records of net bookings for our company, alongside a significant ramp-up in profitability. Laney will provide additional details on our outlook shortly, while Carl will share an update on our exciting diverse multi-year pipeline, including approximately 69 titles that we plan to release through fiscal 2025. In closing, we're highly optimistic about our future. As we continue to expand our enterprise and execute on our growth strategies, we believe that Take-Two remains incredibly well-positioned to increase its scale and prominence within the industry, expand margins, and deliver long-term value for our shareholders. I'll now turn the call over to Carl.
Thanks, Rob. I'd like to begin by thanking our teams around the world for delivering another outstanding year for our company. Strong results were driven by our colleagues' passion, creativity, and commitment to deliver value for all of our stakeholders. I'll now discuss our recent first quarter releases. On April 21st, 2K and Gearbox Software released Coiled Captors, the first of 4 exciting downloadable content packs in the Tiny Tina's Wonderland Season Pass. Featuring a new environment, boss encounter, and legendary loot, the offering represents an innovative post-launch experience from this exciting new franchise. On April 26th, 2K and Visual Concepts launched the Bonsai Pack, featuring 5 playable superstars plus My Faction Evo cards for each. This is the first of 5 downloadable planned content offerings for WWE 2K22, all of which will be available individually and as part of the game's season pass throughout the year. Looking ahead, fiscal 2023 will be another exciting year for Take-Two, as we deliver captivating new entertainment experiences for our players, while also growing our business through our pending combination with Zynga. I'll now provide details on Take-Two's fiscal 2023 pipeline on a standalone basis, which includes 18 planned releases. We expect to deliver 6 immersive core offerings, all of which will be available for purchase. These include The Quarry, which is an all-new horror narrative game from 2K and Supermassive Games, where every choice, big or small, shapes your story and determines who lives to tell the tale. Featuring an iconic ensemble cast of Hollywood stars, including David Arquette, Ariel Winter, Justice Smith, Brenda Song, Lance Henriksen.
By the way, what I'm doing in the background is just accumulating projections and stuff, so nothing too interesting.
Lin Shaye, and more. The Quarry will launch on June 10th for PlayStation and Xbox consoles and Windows PC via Steam. Marvel's Midnight Suns is planned for release during the second half of calendar 2022 and is one of this year's most anticipated games. The title is being developed by Firaxis Games, the acclaimed studio that brought audiences such iconic franchises as Sid Meier's Civilization and XCOM, and features the Marvel Universe's most revered heroes in an entirely new gameplay experience. 2K will have more to share in the coming months. Kerbal Space Program 2, which is coming from Private Division and Intercept Games, is now expected to launch on PC in early calendar 2023 and on consoles later in calendar 2023. Anticipation for the title is high, with more than 12 million views of the announcement trailer. The dedicated Kerbal community can look forward to more information about the game and its new features from the title's ongoing gameplay reveal video series. Turning to our annual sports offerings, fans can expect all new releases from our popular sports series, including NBA 2K23, WWE 2K23, and PGA Tour 2K23, which will debut legendary golf icon Tiger Woods as the game's executive director. 2K will have more to share about these titles shortly. Continuing with our fiscal 2023 pipeline, we plan to release 8 mobile titles, including 4 from new franchises and 4 from existing franchises, and 3 mid-core arcade titles for purchase, which include 1 new sports title from 2K, a new franchise from Private Division, and a new Tales from the Borderlands game, which will feature new characters and stories set in the Borderlands universe. And lastly, we'll have 1 new iteration of a previous release title available for purchase. Our labels will continue to provide new content and experiences that drive engagement and recurrent consumer spending across many of their hit franchises, including NBA 2K, Grand Theft Auto Online, Red Dead Redemption Online, WWE 2K, Tiny Tina's Wonderlands, OlliOlli World, and more. Excluding our pending combination with Zynga, we expect to deliver 51 titles throughout fiscal 2024 and fiscal 2025, which we believe will pave the way for us to achieve a strong acceleration in net bookings and growth and profitability. This includes 18 immersive core releases, 7 of which are sports simulation games. 16 of these will be available for purchase, while 2 will be free to play. 10 independent titles, which will all be available for purchase. 12 free-to-play mobile games. 4 mid-core games for purchase, 2 of which will be sports-oriented. And 7 new iterations of previously released titles, which will all be available for purchase. It bears noting that these titles are a snapshot of our current development pipeline. It is likely that some of these titles will not be developed through completion, that launch timing may change, and that we will also be adding new titles to our slate. In addition to our full game releases, we will continue to offer post-launch content from many of our releases, ranging from virtual currency sales to DLC packs and season passes. Turning to esports, the NBA 2K League kicked off its 5th season on March 23rd and included new sponsors such as Google and Coinbase. This year, the league has partnered with the city of Indianapolis to bring all tournaments, as well as playoffs and finals, to its new home at the Pavilion at Pan Am. The league's overall prize pool has increased to $2.5 million this season, the largest since its inception. We remain very excited about the continued success and growth of the NBA 2K League, which has a long-term potential to enhance engagement and to be a driver of profits for our company. In closing, as we execute on our organic growth initiatives and unlock new opportunities presented by our pending transaction with Zynga, we believe that we can broaden our portfolio and capitalize further on new platforms, business models, emerging markets, and distribution channels. As we deliver on these growth opportunities, we believe that Take-Two is exceedingly well positioned to deliver long-term value for our shareholders. I'll now turn the call over to Lainie.
Thanks, Carl, and good afternoon, everyone. Today I'll discuss our fourth quarter and fiscal 2022 results, and then review our financial outlook for the full year and first quarter of fiscal 2023. Please note that our initial outlook does not include Zynga in our projected results or the interest expense on the notes that Take-Two issued in April to fund the cash portion for our pending acquisition of Zynga.
That's what I was talking about earlier. It doesn't actually take into account Zynga.
Additional details regarding our actual results and outlook are contained in our press release. I'm extremely pleased with the accomplishments that Take-Two delivered during the fourth quarter and fiscal year. We posted strong financial results, took exciting steps to position the company for long-term growth, and announced our transformational pending combination with Zynga, which brings massive potential to our portfolio and financial profile. I'd like to thank our teams for their passion, commitment, and for continuing to help Take-Two deliver its strategic vision. Starting with our fourth quarter, total net bookings grew 8% to $846 million. Our newly released WWE 2K22 and Tiny Tina's Wonderlands outperformed our expectations, as did Red Dead Redemption 2. During the period, digitally delivered net bookings grew 4% and accounted for 91% of the total. This exceeded our outlook of a slight increase due to the outperformance of digitally delivered full game sales. 75% of console game sales were delivered digitally, up slightly from last year. As Jeff mentioned, over the last few months, there's been a wide array of long-awaited, high-quality new releases in the market, including several of our own exciting titles that have not deployed significant live service offerings. Accordingly, our recurrent consumer spending declined 6% and accounted for 60% of total net bookings. GAAP net revenue grew 11% to $930 million, while cost of goods sold increased 43% to $399 million, driven by amortization of software development costs for our fourth quarter release. Operating expenses increased by 32% to $403 million, driven by the addition of Nordeus, including its earnout, as well as higher marketing and transaction costs. And GAAP net income was $111 million, or 95 cents per share, compared to $219 million, or $1.88 per share in the fourth quarter of fiscal 2021. Turning to our fiscal 2022 results, total net bookings were $3.41 billion as compared to $3.55 billion in the prior year. As we expected, throughout the year, our engagement trends were notably higher than they were pre-pandemic. However, as the world began settling into a new normal, there was a moderation of the trends that benefited our industry during the height of the pandemic. As a result, digitally delivered net bookings declined 2%, slightly outperforming our guidance of a 3% decline, and accounted for 91% of the total. 68% of our console game sales were delivered digitally, up from 64% last year, and recurrent consumer spending declined 6%. Non-GAAP adjusted unrestricted operating cash flow was $425 million as compared to our outlook of over $400 million. During fiscal 2022, we spent $159 million on capital expenditures. At fiscal year end, our cash and short-term investments balance was approximately $2.6 billion. GAAP net revenue grew 4% to $3.5 billion, while cost of goods sold was flat at $1.5 billion. Operating expenses increased 24% to $1.5 billion, driven primarily by the additions of Playdots and Nordeus, including the revaluation of its earnout, higher personnel, stock compensation, marketing and IT expenses, and higher transaction costs. And GAAP net income was $418 million, or $3.58 per share, as compared to $589 million, or $5.09 per share in the prior year. Today we provided our initial fiscal 2023 outlook for Take-Two on a standalone basis. We project net bookings to range from $3.75 to $3.85 billion, which is a new record level for the company and implies strong growth of 11% at the midpoint. We have an exciting pipeline of releases that we expect to bring to market during the year, including 6 immersive core titles, which is twice as many as we delivered in fiscal 2022. The largest contributors to net bookings are expected to be NBA 2K, Grand Theft Auto Online and Grand Theft Auto 5, Red Dead Redemption 2 and Red Dead Online, Tiny Tina's Wonderlands, Marvel's Midnight Suns, and PGA Tour 2K23. We expect the net bookings breakdown from our labels to be roughly 60% 2K, 30% Rockstar Games, and 10% Private Division and T2 Mobile Games. And we forecast our geographic net booking split to be about 60% United States and 40% international. And we expect recurrent consumer spending to be flat compared to fiscal 2022 and represent 58% of net bookings, which is down from 64% last year due to a greater number of new releases. We project digitally delivered net bookings to grow 10% and represent 91% of net bookings, which is in line with last year. Our forecast assumes that 71% of console game sales will be delivered digitally, up from 68% last year. We expect to generate more than $350 million in non-GAAP adjusted unrestricted operating cash flow, and we plan to deploy approximately $120 million for capital expenditures. We expect GAAP net revenue to range from $3.67 to $3.77 billion, and cost of goods sold to range from $1.66 to $1.7 billion. Our total operating expenses are expected to range from $1.74 to $1.76 billion. At the midpoint, this represents a 17% increase over the prior year. As Carl mentioned, we have approximately 69 titles that we plan to deliver over the next 3 years, and we will be investing behind our pipeline in key areas such as marketing, personnel, and IT. And we expect GAAP net income to range from $223 to $252 million, or $1.90 to $2.15 per share. For management reporting purposes, we expect our tax rate to be 16% throughout fiscal 2023. Now moving on to our guidance for the fiscal first quarter. We project net bookings to range from $700 to $750 million as compared to $711 million in the first quarter last year. The largest contributors to net bookings are expected to be NBA 2K22, Grand Theft Auto Online and Grand Theft Auto 5, Tiny Tina's Wonderlands, Red Dead Redemption 2 and Red Dead Online, The Quarry, and WWE 2K22. We expect digitally delivered net bookings to increase 2%. Our forecast assumes that 78% of console game sales will be delivered digitally, up from 73% in the same period last year. We project recurrent consumer spending to decline by 10%, as we believe that the momentum behind our own exciting titles that have not deployed significant live service offerings will continue into the first quarter. We expect GAAP net revenue to range from $810 to $860 million, and cost of goods sold to range from $307 to $333 million. Operating expenses are expected to range from $387 to $397 million. At the midpoint, this represents a 25% increase over last year, driven primarily by higher personnel and marketing expenses, as well as transaction costs. And GAAP net income is expected to range from $93 to $105 million, or 80 to 90 cents per share. In closing, we have great confidence in our ability to drive accelerated growth into fiscal 2023 and beyond. And we believe that our pending combination with Zynga will take our business to an even greater level of scale and profitability. As we execute on our strategic initiative, we believe that we can deliver sustainable, profitable growth for our shareholders. Thank you. I'll now turn the call back to Strauss.
Thanks, Lainie and Carl. On behalf of our entire management team, I'd like to thank our colleagues for delivering another outstanding year. And to our shareholders, I'd like to express our appreciation for your continued support. We'll now take your questions. Operator?
Thank you. At this time, we'll be conducting a question and answer session. If you'd like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star.
All right, so far while this guy's talking quietly,
please,
I got growth rate of about 12% projections estimated, so we'll hear what the analysts
Our first question comes
asking.
from Andrew Urquhart with Jefferies. Please proceed with your question.
Great, thank you. Just two quick ones. The first one, on RCS, it looks like you're guiding that flat, and it was down in fiscal 22. Is that more a product of quantity, or is there something you're seeing in the underlying engagement stats that give you comfort that lapping some tough COVID comps here in the first half are doable? Thank you.
Yes, so the first year is definitely due to the comp against the year with COVID from last year. So we had a really strong Q1, and so comping against that quarter was very difficult. And then this quarter, we were seeing a lot of people playing the full games that we put out, as well as some of our competitors, so that also affected RCS in the quarter.
Got it. And then in the guide, then, just trying to understand why the guide was flat, and for it just seems like it's still fairly tough. So is it comfort coming back of more RCS for 23 or something else?
So in Q1, we're expecting to be down by about 10%, and that's the ongoing of what we're seeing in Q4, which is the players playing the full games of our games and some of our competitors. So that's we're continuing. We've seen that in Q1, and we expect to see that. For the full year, we expect to see it flat for the full year. So some of our new games that are coming out don't have any recurrent consumer spending associated with it. We expect NBA to be up for the year, and then GTA Online and Red Dead Online we expect to be down for the year.
Got it. Thank you so much. And then, Strauss, you did a wonderful podcast earlier in the month, I think, with LionTree. In it, you discussed M&A and the importance of listening to offers. Just out of curiosity, with the changing valuations we've seen across the landscape and the market that we're in, What are your broader thoughts on M&A activity here at the current levels and volatility in the market?
Well, no one likes to see their stock price experience a drawdown, but we ultimately will always trade on our fundamentals, and that's how we look at the company. So we have a really strong company. We continue to perform and outperform expectations, as we have in this quarter and in this past fiscal year. We've just issued initial guidance, which is a very positive look at our company and at the market. So we remain in a very optimistic place, and I think similarly situated companies probably feel the same way. When the overall market re-rates, there's nothing that we can do about it, nor something that we would wish to do about it. We don't need to access the capital markets at this price level. We're under-leveraged no matter how you look at it. We have a small amount of investment-grade debt coming with the closing of the Zynga transaction, and then we have a really powerful company that we expect to continue to fire on all cylinders. So momentary changes in the market are kind of irrelevant to us.
Got it. Thank you guys so much.
Our next question comes from the line of Eric Handler with MKM Partners. Please proceed with your question.
Thank you very much. I appreciate the question. Two questions. Strauss, maybe you could start off. Do you think there's any type of shift going on in preferences among gamers for more story mode type of play versus, let's call it, the live services type of play, and people are just sort of craving that story mode a bit more lately?
It's Carl. Actually, I think that we never, as an industry, went away from the attractiveness of the story mode content. We've always said that we believe in that kind of content. We've always delivered on that as a company. It's the ultimate entertainment experience, and I think what you're seeing is you're just seeing some other games in the market capitalize on that. I think there are a number of them out there right now, so maybe it looks that way. But when you look at it over time, story-driven content has always been a significant portion of the activity and also the economy behind the industry, and we expect that to be the case going forward.
Great, thanks. And just as a second question, comparing your guidance to what was in the S4 from a few months back, I'm curious if there was, when you look at the sort of puts and takes, it looks like the bookings guide is a little lower than your internal budget. The EPS guide is a little better than internal budgets. Anything you could talk about, maybe what's changed on the margin since then?
The projections that we gave in the F4 were, not exactly our guidance because these numbers reflected our internal estimates as of a point in time, which was back in December 2021. So there's always some fluidity in our release slate, our marketing plans, the overall operating expense needs, and those, can change our projections over time. Also, like our net bookings guidance was affected by the Russia-Ukraine situation, so those numbers are not included in our projections and in our guidance right now. So that really affected it. So there's always shifts in our impact on our software development costs and marketing expenses, which also affected the bottom line. So those are some of the differences between guidance and the S4.
Thanks, Lainie.
Our next question comes from Matthew Thornton with Truist Securities. Please proceed with your question.
Hit on a little bit, but Lainie, I'm wondering if you can maybe...
By the way, I'm being really quiet right now because I'm actually selling some options right now. So
quantify some of the discrete items that have kind of been going on the last 3 months, and what I'm getting at there is Russia, as you alluded to, as well as currency. How can we think about that headwind, maybe versus where we were 3 months ago? And then maybe more broadly, I don't know if this is for Strauss or Carl, any latest thoughts on just where you think we are in the quote-unquote reopening? Are we at a normal run rate? And similarly, just player behavior. Obviously, there's a lot going on again on the macro front. I'm kind of curious your thoughts on what you're seeing in the player behavior more broadly. Any color there would be very helpful. Thanks, guys.
So for the first one, Russia and Ukraine is not a big material number for us, but it is something that did change between the S4 and our guidance. Probably a bigger difference in the top line was more of some of the fluidity in our release schedule. In terms of the currency, there wasn't a huge change for us between those few months. We have a pretty big natural hedge, so there really isn't a big change between then and now for us. When we set our guidance, we set it based on the spot rate at the time. So any major changes from the time that we set our forecast, that could be a difference going forward. But as of right now, it's based on that spot rate.
And in terms of the post-COVID outlook, it does feel like we basically are in a normalized situation right now. Actually things have worked out basically as we thought they would. We expected that our audiences would stay with us, and they have. And we also expected that we would see some level of pullback in terms of, engagement amongst that audience, which we've seen some of that. And I think you can see that reflected across the entire industry. But at this point, I would characterize it as we sort of normalized, we're stabilized, and I think we're back on the growth trajectory that we were all anticipating a year ago when we thought this would occur this way.
Our next question comes from Mario Lu with Barclays. Please proceed with your question.
Great. Thanks for taking the question. I have two on GTA. So for GTA Plus, you mentioned the conversion rate came in above your expectations. So is there a possibility of that subscription kind of being offered to the current gen players as well in the future? And then secondly, you mentioned that I believe the full year guide for GTA or current consumer spending is going to be down this year. So how should we think about the cadence of updates, this year for GTA Online and going forward in terms of current gen versus next gen? Thanks.
Yeah, we haven't given out any news about broadening the subscription offering. We're thrilled about how it's been rolled out so far. We're thrilled with the conversion rate, and it's clear that consumers really like the opportunity to engage with Rockstar with GTA Online, and they value what we're offering through a subscription. And with regard to ongoing content updates, Rockstar has said there's more content coming, and we're excited about that.
Okay.
Our next question comes from Colin Sebastian with Baird. Please proceed with your question.
All right, thanks. Good afternoon, everybody. Maybe just to follow up on the normalization of usage and engagement, monetization trends. I guess, we're looking at mounting concerns about a recession, maybe even stagflation. I think historically the industry's performed pretty well in economic slowdowns, downturns, but curious, Strauss, I guess how you're thinking about the macro environment. Are there scenarios where we could see an impact to the growth and investment strategy on the horizon? And related to that, on the mobile side, there are concerns that the softening we saw in the March quarter might continue through the year. So curious if that impacts at all your plans for Zynga integration and the synergies. Thanks.
Thanks for your question. Look, people would like to claim that entertainment is countercyclical or immune to cyclicality. That is not the case. The entertainment business will be affected by an overall economic slowdown. However, we can be seen as resistant to such a slowdown. So, for example, if you go back to 08 and 09, the market actually grew in 2008 by 20%. It did decline in 09, but the 12% drop was less pronounced than many other business segments. And after September 11th, the U.S. gaming market actually grew by 42% in 01 and 11% in 02. So in the event of a consumer recession, and I'm not going to opine on that because I'm not sure my opinion is very valuable. In such an event, I think we will be resistant but not immune. But we can withstand any such slowdown without a problem. And look, if you put out great entertainment, people will come out for it, and they'll come out in good times and in bad. Sometimes they'll come out more in bad times. By the way, I don't think there's any evidence that we're going to have stagflation. Stagflation referred to a time, when there was both high unemployment and high inflation. And by high inflation, mortgage rates were over 16%. We're not in that ballpark. We're not close to that ballpark. And we have very low unemployment rates in this country right now. So stagflation doesn't seem to me to be a meaningful risk. Some kind of moderate recession, I suppose, is conceptually a risk, but it wouldn't have an impact on this business that we can perceive at the time. In terms of mobile games, T2 mobile games did just fine. They're performing incredibly well and continue to perform well in the fourth quarter. So, if that's any guide about how we're going to do, we feel just great about the pending combination with Zynga, and we think there's wonderful opportunities there. And we think that some of the challenges, for example, the post-IDFA world, actually create opportunities for a company that has the kind of consumer database that we collectively have with Zynga and the data analytics that we have to help us navigate that database.
I agree with the acquisition. Yep. I think they should do it.
Our next question comes from the line of Omar Dessouky with Bank of America. Please proceed with your question.
Hi, thanks very much. There's been some debate in the market as to the size of the total addressable market for Grand Theft Auto 6, which was discussed in a blog post by Rockstar, because it will launch into the Gen 9 console cycle, whereas the Grand Theft Auto 5 launched slightly before PlayStation 4 and Xbox One were launched. So will such a graphically intensive game be as performant on Xbox One and PlayStation 4, or even the Nintendo Switch, as it will be on Xbox X and PlayStation 5? And does streaming technology have the potential to make older generation console and mobile devices capable of a satisfactory performance for such a state-of-the-art game?
Well, in reverse order, there really aren't very many streaming platforms that are up and running right now. Stadia is still up and running. They don't have that many titles, and they have a relatively small audience. We've been very supportive of Stadia, but it's a tiny portion of our business, to be clear. And of course, there's Xbox, but these are not meaningful markets right now. I'm not sure I understood the question. If you're asking, will the launch of the next update in the Grand Theft Auto series, which has been discussed by Rockstar in a blog post, as you pointed out, have a salutary effect on the launch of upcoming platforms? Was that your question?
No, it's really the question of whether the installed base, we should think about the installed base as the Xbox One, PlayStation 4 plus Xbox X, PlayStation 5, or only Xbox X, PlayStation 5, in which case the TAM would be smaller.
Rockstar hasn't talked about any details at all about the next iteration of Grand Theft Auto. So there'll be more information to come. But I have no doubt that when that moment comes, and there is another iteration, that we'll be releasing to a very robust market.
Okay, could I just ask you also a quick follow-up? In terms of your capitalized development expenses, do those typically accelerate, as you head closer towards the launch of a big game like Grand Theft Auto 6, or are they relatively flat over time?
It depends on what games are being worked on and how big the teams are that are working on the games. So over time, the balance on the balance sheet will go up and down based on what titles are releasing and how the games are being developed. But it doesn't go in line with any one specific game. There's a lot of games being worked on. As Carl mentioned, there's a large amount of titles that are in the pipeline, and most of those are capitalized other than our mobile titles.
Our next question comes from Benjamin Soff with Deutsche Bank. Please proceed with your question.
Hey, guys. Thanks for the question. So just now that the FIFA license is officially kind of up for grabs, I wanted to gauge your interest in building out a soccer franchise, either simulation or non-simulation. And if you've looked into it or thought about it, how do you see the different opportunities and challenges there? Thanks.
Well, we noticed. And we tend to be thoughtful about our business at all times. We're excited about building out our sports business, and we don't have much else to say at the moment.
Okay. He also said okay.
Our next question comes from Brian Fitzgerald with Wells Fargo. Please proceed with your question.
Thank you. Tiny Tina's Assault on Dragon Keep. It was featured in the PS5 PlayStation Plus, and it included a pre-order from Wonderland. So just wondering if that Dragon's Keep engagement, corresponded with pre-ordering, eventually, drove conversions, if that was a unique dynamic, if that was helpful to how that particular marketing program works. And then, Strauss, you highlighted cross-play functionality with Tiny Tina. Is there anything notable to call out with respect to, what you're seeing in the cross-platform play there, either versus other prior games or other cohorts of players? Because you mentioned a nice influx of those who had not previously played Borderlands games.
I'll take the second part of the question first in terms of the crossplay. Look, the crossplay component of Tiny Tina's Wonderlands is terrific, and we're really excited about that. We think crossplay generally is great for the consumer. To have people being able to play against each other, with each other across console and PC, that's an ideal situation, and we do think that ability has helped with Tiny Tina. I don't have any specific data to share of how many of the new people was because of crossplay. That part I don't have to share, but I can tell you it's a good component, and it is very well executed by Gearbox. And I just could ask you I didn't really quite understand the first part of the question about Assault on Dragons. What was the specific question there?
So there was, if I recall correctly, there was it was highlighted. Assault on Dragon was highlighted in PS5 and the PlayStation Plus, and it included a Wonderlands pre-order screen. So I'm just wondering if that engagement with Dragon Keep, kind of built momentum and drove conversions in terms of people pre-ordering or even engaging with that, and then eventually buying Wonderland.
Yeah, I would, again, I don't have specific numbers to share with you, but that was a significant marketing beat for us. Anytime that we can re-engage a consumer base into a franchise, particularly to launch a new franchise, it's going to have a very positive effect. And obviously, we were blessed to have Tiny Tina because that's one of the most beloved characters in the Borderlands series. So to have access to that and to put out some content prior to the release of Wonderlands obviously had a positive impact on us and drove momentum prior.
Our next question comes from Matthew Cost with Morgan Stanley. Please proceed with your question.
Hi, everyone. Thanks for taking the question. I guess just on the hiring front, you mentioned in the prepared remarks that you added, 1,000 developers to the developer base this year. What are you seeing in the way of competition, for those developers and wage inflation? And if you are seeing any amount of wage inflation, is that impacting your outlook for hiring for the rest of the year? And then on the M&A front, obviously you're still in the process of closing the Zynga deal, but it does seem like we're in a moment after many years of running the business with very little leverage and cash on the balance sheet. Like there are opportunities out there to go after assets at depressed valuations. So I guess, are you on the hunt post Zynga, or more focused on kind of the integration effort in the near term? Thanks.
Sure. In terms of the wage inflation, I think like many other companies, we are feeling the impacts of wage inflation, and particularly since the labor market is pretty tight right now. That being said, we really do believe that we're very well positioned to attract and retain talent. We offer highly competitive compensation packages, benefit packages, many of which include profit sharing and equity. So when the company succeeds, our employees succeed, and that is very well appreciated. And there's also the element of our culture where people come here because they like to work here, and they can, and particularly on the creative side, where they have the freedom to pursue their passions in a way that also enables them to enrich themselves at the same time. So yes, I would say everybody in the entire market is feeling some impact of the tight labor market, but I think generally speaking, we're pretty well positioned because we consider that a competitive strength of ours.
And on the M&A side, our story has mostly been an organic growth story for a very long period of time. We've selectively acquired companies that have great intellectual property and great teams. And then, of course, we acquired Social Point, Playdots, and Nordeus in order to enter the mobile business. And most excitingly, we expect to close our combination with Zynga next week. But over the 15-year history that this management team has been here at Take-Two, the bulk of our growth, the bulk of our success has been organically driven. And I think that'll continue going forward. And we have great opportunity because combined with Zynga, we have the best collection of owned intellectual property for PC and console and mobile in the business. And I think the most talented creative people, the most talented executives. And of course, I'm speaking from our perspective, but I believe that, and I think we have to deliver on that promise, and we will do so organically. I don't know what opportunities exist given what I hope will be a short-term re-rating of interactive entertainment stocks. Ultimately, all securities will trade on their fundamentals, and the fundamentals in this business are quite strong, and I think will continue to be strong. That said, we have the ability in a highly disciplined way to do more inorganic growth transactions. And if they make sense to us, we will pursue them. But it's probably not the first order of business.
Our next question comes from the line of Matthew Thornton with Truist Securities. Please proceed with your question.
Hey, good afternoon, guys. A couple quick follow-ups. Just coming back to the capital allocation question there, Strauss. I think a couple quarters back, might have been the fiscal third quarter, you actually bought back some stock for the first time in several years. I think you guys have typically done that pretty opportunistically. So my first question here is, given the pullback in the shares after you kind of closed the Zynga deal, would buybacks or opportunistic buybacks be something you'd entertain, or are you trying to perhaps bring leverage down faster? Just kind of any thoughts there. And then just secondly and relatedly, post-close of Zynga, would you wait till the following quarter to issue pro forma guidance? Is that something you might entertain intra-quarter? Just any way for us to think about that would be helpful. Thanks again, everyone.
Yeah, we've said that we believe in returning capital to the shareholders when it makes sense economically, and we've done buybacks on an opportunistic basis. Generally speaking, when we perceived there to be a deep value opportunity in the marketplace, we perceived such deep value at $158 a share. Sitting here today, we were wrong about that. But it's still this management team's view that represents deep value of this company for what that's worth. We are heading into a transaction. We have put leverage on the company for the first time ever. And so I think, again, buybacks won't be our first order of business, but we do retain the flexibility to pursue buybacks if we decide to do so.
Okay, good. Good to know.
Our next question comes from the line of Mike. I'm sorry, were you still?
Sorry, we still have Laney to answer the second part of the question.
My apologies.
Oh, no problem. So for the guidance with Zynga, we plan to provide consolidated guidance when we report our Q1 results in early August.
Our next question comes from the line of Mike Hickey with the Benchmark Company. Please proceed with your question.
Hey, thank you. Hey, Strauss, Carl, Laney, Nicole. Nice quarters, guys. Congratulations, and thanks for taking my questions. Two questions. The first, I'm not sure how much you can speak to this, but sort of, Laney, maybe your philosophy on guidance as it relates to mobile. Do you think there's much of a delta there in terms of what Zynga has provided to the street historically? And then more, I guess, the higher view, when you look at the mobile market through the first quarter here, how are you reflecting on growth of mobile, and is it meeting expectations? Follow-up.
In terms of our guidance process, in terms of mobile, we haven't closed the transaction yet, so we'll start to, work with Zynga closely and get a chance to get under the numbers with them and make sure we have a consistent approach towards how we plan all of our business. So that's the plan right now.
And Strauss, did you have a view just on mobile market growth, if it's still tracking where you thought it would be, or if, first quarter in, has changed your view at all?
Yeah, we don't track, growth statistics quarter to quarter. Long term, we believe that there's a wonderful opportunity in interactive entertainment generally, and that mobile will continue to be a rapidly growing segment of the marketplace.
Our next question comes from the line of Doug Creutz with Cowen and Company. Please proceed with your question.
Hey, thanks. One of Zynga's key executives recently left to go take a CEO role at another company. Just wondered if you could give any update on your plans for how the mobile business is going to be run, assuming the transaction closes. Thank you.
It's a little early to have that conversation because the transaction is not closed yet. Zynga's been operating successfully as an independent company for approximately 15 years, and they have highly experienced key personnel across all areas of their business. Under Frank Gibeau's leadership, Zynga has a deep bench of talent, including many executives who aren't exactly public-facing in their roles, but they are running the business on a day-to-day basis. So we're highly confident that there are plenty of talented executives at what will become the Zynga division of Take-Two, assuming everything goes according to plan. And we're very excited about the future together, and we'll have much more to say about that company after the deal closes.
Okay, thank you.
Our next question comes on the line of Martin Yang with Oppenheimer. Please proceed with your question.
Hi, good afternoon. Thank you for taking my question. This is a more of a longer-term question for Strauss. Can you maybe share with us, how would you characterize the impact of great individual creators, their impact on the commercial outcome of the games, and has that really changed since you started working in the industry?
Well, I think we've put more focus on creative talent here at Take-Two than perhaps any other company in the interactive entertainment business, and our success has reflected that choice. It's an easy thing to say, it's a hard thing to do. We truly encourage the most creative people in the industry to come to our company and work on what they're passionate about, and we make decisions that are in service of that approach, that strategy, and our goal to make great art as well as to make great hits. The work is done by teams. All the work here is done by teams, but the leadership is crucial, and we have great creative leadership across the board. And we're really, really proud of that great creative leadership and grateful to them for the results that they continue to deliver here.
Our next question comes from Andrew Marok with Raymond James. Please proceed with your question.
Hi, thanks for taking my questions. You mentioned that you saw some success in the standalone GTA Online version. I guess, who are the players that are getting into GTA Online at this point? How do they differ from the legacy GTA Online players, to the extent that you can provide quantitative data around that as well? And then secondly, is there any updates that you guys have to share maybe on your NFL partnership? Thank you.
Yeah, I think on the GTA players, I think what's most interesting is that the market continues to grow. That we've sold in 165 million units of the title, even though it was launched in 2013. The title has dominated now 3 console generations. And that when we created a standalone version of Grand Theft Auto Online, lots of people showed up to play it. So clearly the market is huge and continues to grow, and I think Rockstar has done a great job in continuing to make the market accessible for people over a long period of time. But no, we don't have anything specifically to say about the particular people who've shown up, even though we have a lot of good data. And we don't have anything right now to say about the NFL partnership, although we're excited about it and looking forward to the releases that will come in the future.
Our next question comes from Clay Griffin with MoffettNathanson. Please proceed with your question.
Yeah, hi, good afternoon. Just a point of clarification there. I know it was late in the quarter, but the standalone price for GTA Online, is that, I'm assuming that's getting booked at RCS, or maybe there's some nuance there, just to confirm that. And then just, I'm curious if you could maybe put some thoughts around just the strategy around that. I think Strauss, you've called the combination of the full game online and tethered and free to play, just how successful that's been in the past, obviously. But any thoughts around, should we assume that is kind of the MO, I guess, for future titles of this size or ilk?
Sorry, I apologize. If you can, what was your question about pricing?
Standalone.
Oh, just curious if the standalone pricing for GTA Online, is that getting booked as recurrent consumer spending, or is that being booked as full game, I guess, is the first question. And the second question.
So the standalone game itself is a full game, but if you're playing it online and buying virtual currency, that's RCS.
And your second question? I'm sorry, I missed the second one as well.
Sure. No, just general thoughts on considering the relative success of tying GTA Online to GTA 5. If we should expect that that's the kind of modus operandi for games of this stature for your biggest IP going forward.
We have said that we expect to offer opportunities to engage with our titles on an ongoing basis after release. We aim to provide such opportunities and to monetize them when it makes sense. But they're all different.
All right, I'm going to end it there because they're just going to say, yeah. Like, modus operandi, he's basically saying, is that like the new standard, Grand Theft Auto. So after all that, I'd say really interesting stuff. The highlight of everything is the pipeline. The pipeline, that's why I actually have it here. So you guys can actually read it now with me. But basically, they have a crazy good pipeline, and they're not valued at the scale of something like EA or Activision. They're the smallest of the three. They are actually they're growing quite rapidly. Also, they're the best capitalized when you actually take a look at the balance sheet. They have no debt whatsoever. I was kind of highlighting that. They were talking about it, that they're going to have some debt now because of the Zynga acquisition. Over the past several years, and I was taking a look kind of in the background, I'll just give you my quick thoughts. They are basically having an incredible amount or an incredible return on invested capital, historically speaking. So they are very good at capital allocators. The CEO has done a fantastic job as a manager. Now, taking a look again, the highlight of this call again, or the highlight of this earnings release, is the pipeline potential. They have 24 immersive core titles, and I also kind of dragged it down here when I was going over it. The immersive core is titles, think of it like NBA 2K, Grand Theft Auto, Red Dead Redemption, so basically the big titles. And then independent is externally developed, so they have 10 independent titles. So those smaller games can still actually grow into something big, and that relationship with those developers can always lead to an acquisition later down the road. And so a lot of these independent developers, they need a publisher to stand behind them, and it's to their incentive to actually create a fantastic game in the case that they might get acquired later in the future as like a payout for those guys. So mobile games, they have 20 without, I think that's without Zynga. So really interesting there. Now, let's see here. Yeah, it does not include Zynga. So just to confirm, you see at the bottom, it does not include Zynga. So that 20 mobile games is, the Grand Theft Auto, the trilogy, all these mobile games that they are expanding drastically into. We also took a look at these. I actually showed this for a little bit. So this is the breakdown of the revenues by segment. You can see from 2020 to 2022. Just a quick highlight, you do see total net revenue has been growing quite nicely, and most of that growth has come from mobile. You see that mobile growth segment strong. PC is actually down from 2020. Interesting to note that. And then console has grown a little bit, but most of the growth has been from mobile. So right now, if you think about the games that they've released, they've had Red Dead Redemption, which is more recent. Grand Theft Auto at this point is a very old game, and it's still producing a lot of value. So it's good to note that. That's a lot. That's a huge measuring stick they have to surpass when the next Grand Theft Auto comes around. They made such a fantastic game that resonated with the consumer. We'll have to see how that resonates in the next title. But there's a lot of anticipation, and the trailer will release soon in the next couple years for the next Grand Theft Auto. So also taking a look at the breakdown of revenues, we see United States makes up a good portion of the revenues, international another good portion. So very well geographically diversified video game company. And also we want to see digital versus physical. Most of the copies they do sell is digital. So digital copies, of course, the trends are going in that direction, and physical is kind of the dying trend. You can see it's almost cut in half from 2020. So really strong there. And also digital has a greater propensity to create the opportunity for the company to improve authentication services, so to kind of crack down on pirating. And there's a lot of discussions I've been having with individuals in the industry on how the industry is taking steps or precautions to eventually potentially eliminate piracy as a whole for video games. And actually, I won't get into it. That will be another video. But it is interesting stuff. All right, so pipeline's fantastic. Results are pretty good. growth rate that I've penciled out is 12%, and then I kind of went back and reconfigured it for other, or not reconfigured it, but looked at other analysts from the likes of Bank of America, Morningstar, and they're coming out with similar numbers of about 12-ish% growth projected into the future. This is based off of the new pipeline, the pipeline results, so they could outperform this. I think on the higher end, they could get to about 20-ish%, and that's if they start expanding rapidly into mobile, and mobile becomes a massive segment. So that's hopefully not, that's the hope that Zynga actually pans out really well, and the strength of mobile as a unit grows as well. There also is the added benefit. You saw that there was an analyst who did ask the question, so now I know that it's not just me thinking it. I'm not as smart as I thought I was, but they might get acquired. So the questions that they might get acquired in this environment. Netflix, I'm telling you right now, Netflix, I am telling you right here, right now, you want a video game company, here's one right here, fantastic titles. You just buy them and you just let them do their thing. And you keep that CEO, you pay him the same amount, okay? I don't know if that's possible. He might be like, I want to be CEO. But no, this CEO, he's been really good. As far as the video game CEOs have gone, he's done a fantastic job. They talked a little bit about the in-game currency of Grand Theft Auto. So, you can buy shark cards if you're a Grand Theft Auto player. I haven't played Grand Theft Auto in a long time, but I am aware of that it is incredibly popular. You see, that's where I can say you don't have to participate in the said product to understand the value of said product. So I understand the value of product because I have played it in the past, of course. I think most humans on this earth of the male sex have played Grand Theft Auto. Even in the female sex, it's decently popular as well. But like I said in the beginning, mobile games is the strength for higher penetration among females, and males is still dominating PC and console. So with that being said, we're going to go over here to the evaluation, and yeah, you can get a little sneak peek of SWK, which the video hasn't even been produced yet, but just ignore all those because those growth rates don't matter for that. All right, so ignore these growth rates for Take-Two Interactive as well. So we're going to eliminate that. And the model's kind of waking up today because I haven't used her today. So, okay, so now she's awake. And buybacks, I do think they're going to execute some buybacks as they've been hinting in the earnings call. They're going to take on some debt. So regardless of the claims of no debt right now, they're going to have some debt. And that was according to what they were talking about within the earnings release. Now, cash flows are going to be very lumpy. So if you actually looked at the cash flows, and I'll take us back to the cash flow statement, I'll explain this in a second. Cash flows are, where are you at? Where are you at, statement of cash flows? Where are you at? Oh, okay, up here. Statement of cash flows right here. All right, so you can see that cash flows are extremely lumpy. So 2021, they came out with $912 billion in cash from operations. And in 2022, they're coming out with $257 million in cash flows from operations. So massive drawdown in cash flows. And we're going to have to perhaps even normalize this, because taking a look at that net income is showing us to be a more steady, it's doing its job basically. If we look at what happened, we do see that there's an increased expense in terms of this line item right here. So software development, basically that's their CapEx, if you want to think of it that way. So they don't have CapEx in the traditional sense because they're not buying equipment, but they are expensing similar to something like a Netflix or a Disney or anything that spends on content. They have to spend on content as well. This is the same type of game, okay, so to speak. So except in this instance, they don't have the subscription model. They simply have the realization event that we always talk about, that something like Disney actually has. Disney has both within their business model. Warner Bros. Discovery has both within their business model. Take-Two Interactive strictly has only the realization event. Realization event, I address it as the, and if you hear anyone else say it on YouTube, you know they watched my videos. I call it as the moment in which they sell the product to the audience, and then after the fact, they can put it onto a subscription service to then derive value from it into the future. So they did have some amortization costs actually showcasing in depreciation and amortization. I was originally thinking it was more amortization, and it's actually split a 50-50. So they amortize intellectual property. The depreciation is, I don't know what exactly that is that they're depreciating, but the amortization, I do expect that because the majority of their assets are in intellectual property. They just apparently also have depreciation costs as well. Stock-based compensation is pretty hefty relative to the size of the net income. So if we actually see, it actually takes out a decent chunk. And every single time I get the chance to, I take advantage of it. And I want to say it again here in this video. Stock-based compensation is a real cost. Every time someone tells you that, they actually don't know what they're talking about. So even CNBC has people on. As you've seen in one of the CNBC reaction videos, they brought on people that believe stock-based compensation is not a real cost. It's a real cost. It's a very real cost, and it will affect the long-term investment results within a particular company. Okay, so I think from here, the growth rates, again, I would say that penciling out, I think everyone's more or less in agreement with a 12%. And a 12% is likely. However, you're saying, oh, it's look at that, those buy prices. We have to normalize it because, like I just said, the cash flows are pretty lumpy. So, and again, I apologize because I do have to change the name of this, and I'm just so lazy right now to really change the name. But this adjustment or financial institution needs to be changed because it doesn't really do that in the back end. It's just originally when I made it specifically for them, but then I adapted it to everything else. So it can be used for anything, in which case I indicate that I don't necessarily want to use the cash flows because there's some sort of weird accounting stuff that goes on. So I make adjustments and I just indicate to the model, yes, please do those adjustments. Okay, so with that being said, you can see how it's already kind of made set adjustments in this case. So I will now from here proceed, and I have to actually, yes, I actually have to indicate something else. So one real quick. So on the PE basis, they are at a 34. And again, this is taking into account the trailing 12 months gap, I believe it's pulling in. So we're going to confirm and say, okay, because the forward PE, just so everyone understands, the forward PE is about an 18.71. That's the estimated forward PE. So this is taking into account probably a bunch of other costs. So it's printing out that PE of 34.17. So that being said, I do think we are going to kind of reflect that growth is going to occur. And again, that growth in EPS would show up something like this. So we put, I penciled that out. It comes out to about like 20-ish% on the optimistic, with including the understanding that it will. So we kind of normalized it out, 20-ish%. But I'm actually going to put that with the right there, and then this one's going to be a higher end estimation. In the center, we're going to have that 15. 12, and 10. So just note or understand what I did, and I'm going to remove the custom weighting to know. What I did was I readjusted these estimates to project out that newer growth. And just so everyone understands as well, the current PE estimate is about 27.30. The forward PE estimate is about 18. Let me see again. I forget. Yeah, the forward P estimate is 18.71. So that's the forward P estimate. That's the trailing 12 months. It's taking about 34.05. So just to highlight that, because I know that I had some people get confused, or I did mention it in the AMD video, but some people don't watch the whole video. So, and that's understandable. That's okay. You have limited time. So I'm just trying to be obvious right here. I'm making that statement here before we continue. It doesn't affect this, okay? All right, so based on that, at a decent margin of safety, we are in the buy zone if you are on the higher end of estimations. So you might believe scenario 5 and believe it wholeheartedly, and so in that case, it would be an interesting buy still at this price. However, if your estimations are coming down a little bit, projected out forward into the coming years, you do have to then understand that the price is still not there for that margin of safety. Of course, like if, for example, you lower your margin of safety, you see that the price still becomes a little bit more compelling. So at a 20% growth rate, you still are in the buy zone. At a 15% growth rate, not quite, but let's change that to 17, still not there. And then I think 19. Okay, so 19 precisely there. That's basically where you're at. So you have to assume about a 19% growth, which is still possible. And remember, it's because they're going to get that spurt. With that forward estimations, that's kind of penciling in the Zynga acquisition. So now I'm going to address that. So we're kind of talking about Take-Two Interactive as a standalone. Now let's talk about Zynga. All right, so Zynga with Take-Two, these actually are the growth rates I would presume. Okay, so I would actually presume stronger growth rates in the future with Zynga as a combined entity and with the pipeline. Because here's the difficulty of video game stocks. You have to have a a decent understanding as the pipeline or the value of said pipeline. Now, I look at the 2K games as cash cows. They will continue to just get their fan base to keep buying those same video games every year, and with minor adjustments here and there. WWE, same thing, as well as any variation of the sports simulation titles, as they call it in their earnings call, sports simulation titles. So all those are going to be cash cows. With regards to the other games, which can be hit or misses, and it's really drastic to the negative if it's a miss, well, you have Grand Theft Auto 6, which will come out very soon within this decade, and I think that's going to drive a lot of the growth, which is, again, why you might think you're being a little aggressive in that estimation. Well, I'm kind of assuming that GTA does really well again. So if it does really well again, we could easily achieve something higher than a 25% growth, okay? And that's concluding that there's going to be more spending comparatively than GTA 5. GTA 5 brought a lot of people who previously haven't been introduced to a Grand Theft Auto franchise into the space, and there's even more accessibility to that game or to these video games than in the past. And a lot of the world is kind of growing and getting wealthier, and their ability to purchase these games is growing as well. So there's still a lot of potential. Don't underestimate that. I want to be very clear. You might, if you're thinking that they're going to get the same amount as the previous Grand Theft Auto, and you're then going to get surprised that they might sell or have a higher total revenue for the new Grand Theft Auto, and you'll be like, why did that happen? Well, you got to understand the expansion and as well as pulling forward. Now, that being said, Grand Theft Auto 5 is still growing, which is hilarious because it's still such an old game. So it's growing in terms of its contribution margin to Take-Two Interactive. And you think about the power of that franchise when you start to appreciate that. Grand Theft Auto 6 might have a lot of fans anticipating it. And I do expect the launch of Grand Theft Auto 6 to be, believe it or not, larger than the launch of Grand Theft Auto 5, which was a massive launch for the company. So I expect that, but that being said, it could also flop. And if it were to flop, you can price in about a 12% growth rate, and that would be like quite a bit of a flop, if you ask me. And the buy price actually comes out to $76.49. So what does that imply? So with a decent small margin of safety, this is with a small margin of safety, a price of $76.49 is, in my opinion, a price that I would be very excited with Take-Two Interactive. Okay, because then I think that I have a lot of room for error at that point. But do I think I'm going to get that price? No. Because I think that the market values Take-Two Interactive in high regard. So there is sort of already an implicit understanding within investors that this is a quality company. And in fact, maybe you take Warren Buffett's approach or mantra seriously in this case, and you say you want to own a fantastic company at a fair price, in which case I'd say that the price here today for Take-Two Interactive is not egregiously overvalued, but it's not undervalued. So it is a great company, I believe, in my personal opinion, at a okay price or a fair price. And in which case I'd say, well, that's one belief. And so I can see or understand why individuals can make the argument here today that they're adding to their Take-Two Interactive position. I won't be adding this company to my portfolio. However, I, as a bystander, can appreciate the company. And, of course, I will be a good consumer to them if they produce quality products into the future. So if you own Take-Two Interactive, my money is going to your pocket in that sense. So yeah, that's pretty much my commentary on that. I will say the sentiment for some reason is rather negative, and I think that has something to do with the stock price, and we'll actually take a look right here. So the stock price has been down over the 1 year at 26.83%, and over the 5 year, it has actually outshone the market at 82.13% over the longer period of time since about, let's see, 1997. Look at that. Long time. It's 2,977%. So again, like I said, it's the smallest of the bunch regarding EA, Activision, and Take-Two. There are, of course, other companies that are smaller than Take-Two. I think their acquisition, again, of Zynga, if you guys didn't catch that, I think it's a fantastic acquisition. I think it's a great idea. I think that expansion into the mobile is shown to be that's where they have a lot of room to grow. They can expand into multiple demographics through mobile. And, of course, there's a lot of people who have more access to mobile than console and PC, because let's face it, consoles are kind of expensive for some people around the world, and also PC gaming is also inaccessible to a lot of people around the world as well. So mobile is of course, obviously, it's a growth opportunity for any company, which is why, Activision's in it. That's why Take-Two's in it. That's why EA's going into it. That's why all these companies are in it. Okay, so if it's obvious, it makes sense. All right, on that note, guys, thank you guys so much for watching, and I'll see you guys on the next one. Bye.